shifting focus to the broader African market. Now, East Africa's consumer spending is set to reach nearly $374 billion this year, with demand spanning across fashion, electronics, cultural accessories, and artisanal products. Property group Knight Frank Uganda reports a 13% year-on-year in footfall increase in malls it manages. That's a sharp turnaround from the 17% decline it saw in the first half of last year. Marc du Toit, head of retail at Knight Frank Uganda, joins us with greater perspective on the region's retail sector landscape. Marc, thanks so much for your time this afternoon. And perhaps let's start off by looking at what is fueling the retail boom in East Africa.
So it's quite an interesting dynamic that we're seeing across East Africa. If one has a look, the weakening of the dollar is definitely having an impact in sales points, with a lot of the goods being imported, and you're seeing an appreciation in currencies of 4 or 5% in East Africa. It's meaning that there is a lower price point to the consumer at the end of the day. That is also having a positive impact in terms of profit margins and input costs of retailers, because most retailers occupy space that is dollar-based rentals.
Yeah.
So they are seeing a decrease in rental. That's on the side of the operation. From the consumer's aspect, obviously there's a little bit more disposable income in the market, and there's definitely, after the COVID hiccup, there's definitely a move back by consumers into physical space and to physical and leisure outings. So we're seeing huge growth in that sector, in restaurant, leisure, outing, and also the fashion sector has been improved dramatically within East Africa by the entrance of international retailers. Your likes of the LC Waikikis, the Numero Unos by Inditex, expansions of Mr. Price and Woolworths out of South Africa. It's making good quality product available to the local market in more offerings, and therefore the market penetration is growing, and we're seeing huge growth. In reality, across the board, in our shopping centers in East Africa, we're seeing 8%, and that's apples on apples growth year on year. Taking into account that inflation is running at about 4%, it's significant growth.
And just zooming in on increasing consumption, you touched on how households have more disposable income. Are we also seeing consumers perhaps taking on more credit?
Yes, there's definitely. I think the East African banks, the credit extension has opened up. We're definitely seeing that even from the mortgage aspect. You're seeing growth in mortgages across East Africa. A lot of that is also based on the product. Historically, residential product has been developed by ultra high net worth individuals that develop around their own wants and their own necessities. And the product that they've put to market has been out of reach of the majority of consumers. What you're now seeing specifically in the Kenyan market, where government is backing tax credits, etc., and tax deductions for low economic type of housing being developed, you're seeing a lot of that being developed. You're seeing a lot of people now entering the homeowners market for the first time. And effectively, as you know, buying your own home after a couple of years is a lot cheaper than renting. So that starts freeing up consumer spending, and also a lot of spending going into homeware, etc., because the accessories for your home. So it's a great time to be in retail in East Africa.
Yeah, and it's interesting to see that we are seeing customers actually going to the malls in a world where, digital adoption and e-commerce is growing. Talk to me about that in particular. Are we seeing the same kind of growth on the e-commerce side as well?
So the reality of it is, look, I'm a proponent of the fact that this e-commerce is a bubble. I know a lot of people think I'm a shopping center dinosaur as to why I'm saying it, but the reality is that there's a home for both.
Yeah.
And one of the problems that we have in the more sort of informalized African market is that a lot of addresses don't have a street name, let alone a street number. So how do you get a delivery to your home? There's also not a lot of trust in the sort of delivery market. You've seen, I mean, the best proponent of East Africa throughout, e-commerce throughout the world has got to be the convenience of food delivery. Now,
Okay,
if you look
okay.
at the likes of Food Panda in the subcontinent and the Southeast Asia, you look at the various different applications in America, you look at South Africa with Jumia, you're seeing a lot of those food delivery vendors demise. They're closing down, they're shutting down. It's not a viable entity. Now, if those type of products are not viable, what does it say for the rest of e-commerce? There is a niche market. There is a 80-20 rule probably. If you look at the data pre-COVID, in America and China, where you've got huge geographical regions where delivery is important, those markets were sitting at 20, 21, 22% of total retail trade was in e-commerce. So in the African context, it's sitting at 1.5%.
Okay.
Post-COVID, which COVID was the best thing for it because it's the only way you could shop. Post-COVID, as things have unlocked and people are finding their social awareness again and moving out, you're seeing those numbers in 24 and 25 being below the numbers of 2019. So it's really stabilized around the 80-20 rule. In Africa, we're sitting at between 1% and 3%. So there's still going to be huge e-commerce growth down the line. But the reality is our formalized retail throughout Africa is still in such its infancy.
Yeah.
And we don't have the penetration of square meterage that you see in the South African market. So both the formalized retail, bricks and mortar, as well as e-commerce, have got huge growth potential throughout the African market.
And that brings me to my next question around the growth potential within, brick and mortar retail. Are we seeing, the increased consumption boosting the property sector? Is there more investment being put into the sector? Are we seeing more malls being built, more tenants in the malls?
So the reality is there are two impacts on that. The first impact is developers don't develop empty shopping centers.
Yes.
They need retailers, and they need the retailers to pre-let and build around the retailers to develop shopping centers. So the problem is historically within East Africa and even West Africa, there's been a dearth of big box retailers. That is changing fast and furious. The international retailers out of the Middle East, Europe, and North Africa are seeing the opportunities. They're seeing the population growth, which is exponential in these markets, and they're seeing that the middle class is growing. So they're seeing opportunity and they're entering the market, which is aiding and abetting the development of shopping centers, both in the primary areas and out into the secondary cities. Obviously, we have certain headwinds and challenges. If you look at, for instance, take Uganda as a market, the tax regime changed some 2 years ago, where government started looking at landlords as being the wealthy. They introduced a 50% limit on tax deductions on property income, with a 30% corporate tax that's basically creating a 15% turnover tax in the market. That stopped all development because the reality of it, a property development, you're lucky if you're seeing 8 or 9% return in year one. And with interest rates now with the dollar sitting at around 11, 12%, and you're sitting with basically with a 15% turnover tax, it's ground that sort of development to a halt, which is good for the existing developments, because they're under demand, while you can see the occupancy growth that we spoke about earlier on, and significant rental growth because it's economic supply and demand. A lot of lobbying has been done to the governments and the financial sectors or departments within government who understand the shortcomings of their regime at the moment, and we're hoping to see changes going forward, which will unlock potential again.
Yeah.
Specifically in a country like Uganda, where you have a housing deficit of 2 million homes per year, it needs a robust, tax infrastructure to allow developers to actually develop, to pick up for the demand. Kenya on its own has been very good with that. hence the fact that you've seen the housing shortage diminish within the Kenyan property market.
So red tape still seems to be a bit of a problem. Before I let you go then, Mark, is the growth sustainable? Are we going to see this kind of growth moving into the second half of the year?
Very much so. Very much also the long term. One of the biggest aspects, if you take a country, I'm using Uganda as data, I'm sitting here today, with a population growth of 3.8%, it's the fastest growing country in the world by population. Okay. And the world we live in today is a consumer-based economy. So that growth, both short term and long term, without a doubt, Africa is the future. We just have to unlock the red tape.
Mm-hmm. All right then, Mark, thanks so much for your time and just taking us through the retail landscape over in East Africa. That was Marc du Toit, head of retail at Knight Frank Uganda. And just a reminder, from shifting power dynamics to digital disruption, business is central to shaping Africa's future. Africa Unlocked returns to Cape Town this week, hosted by Standard Bank Business and Commercial Banking, and will be on the ground bringing you exclusive coverage as leading voices explore how African enterprise can drive real impact. That's from the 11th from the 10th to the 11th of July.